everyone. Welcome back to the Financial Freedom Podcast. And anyway, this week, I'm going to do for my share and review, I'm going to look at Warehouse. Hey, before I get started as well, I'm certainly looking to do some financial freedom interviews and that with people. So if you think of anyone, or even if you'd like to be involved, reach out. I would love to do some interviews and basically talk about what you do and what financial freedom means to you. So reach out. Love to connect with some more people and really get this going for this year. So hey, let's share my screen. And like I said, we're going to talk about Warehouse. Okay, so as you can see here, I've got Warehouse Group on the screen, and no surprises really. Unfortunately, this share has been in a very, very large downtrend. I've got the moving averages on here, the exponential moving averages, where we've got the 15 and 30 weeks. And as you can see, it's just trading down. If I pop it over a 5-year time frame, basically this share, you can see here, it started its downward trajectory 2 years ago, January 2020, which was just to be fair, a lot of shares did sort of head south during that period, because that was when we were starting to hear a lot of noise and rumblings around COVID. And of course, it was only a couple of months out before we went into our lockdown here in New Zealand. We did see it did rally a little bit, but if you can see, the moving averages never really crossed. Okay, it did touch, but they never crossed. So if you've been watching this for a while, you'd know that I like to see when the 15-week exponential moving average is actually crossed up above the 30, and in this case, it never did. So what you can see here is obviously very much a long downward trajectory. If you're unfamiliar with these screens, these Ds here stand for dividends. Okay, so if I hover on one of these others, you can see here back in March not last year, 2022, sorry, it paid a 1 cent dividend, and it was must have been paid out on about the 5th of April, and although the record date was the 27th of March. So that's what the Ds stand for. Okay, so they didn't have a big period here, but then they paid a couple in quite short succession back in 21. So this is a share that certainly wouldn't be spinning my wheels. I'll just take it back to the 2-year one. Okay, now I'll just see if we can put on a comparison for the New Zealand market, the NZSX 50. And as you can see here, so the blue line is the NZSX 50, and of course Warehouse is certainly on that main board. And if you've been following my regular sessions, you'll know that I haven't been that excited for quite some time, actually, pretty much since I've started doing these, about the New Zealand Stock Exchange, because there's been 1 or 2 shares that we've come across that are outperforming, which is great, but there have certainly been a lot of shares, as in the example here of Warehouse, where they're actually laggards on the NZSX 50. But you quite often find that, to be fair, you might find 1 or 2 really strong outperformers, and you'll find a lot are like Warehouse that are really dragging the performance down. So this is definitely why I wouldn't want to be looking at this share. I mean, hey, you could get a little bit of a rebound. You just don't know. If I go back out to the five years, you can see that we do get some little bounces, a little bounce here and a little bit, but then it keeps trading down. So overall, this market is definitely in a downtrend. I'm certainly not the type of person that wants to average down. So that's, in other words, when a share is falling, I do not want to be buying more stocks, okay, in any company. And the reason for that is because imagine if you bought up here, you weren't to know that it was the top, and then you've obviously started averaging down. Even if you thought back here, when we had its major drops, you might have thought that was a great opportunity. But I tell you what, if it keeps doing this, in my view, it's not a smart move. Hey, you also might have been the sort of person that bought near a top, again, without knowing. But if you're trading in relation to the trend where it's all going, you would have had a stop in place somewhere to protect your capital, okay? And that's where most of the winners, to be honest, are found, when is trading exactly with the trend, what's happening. So if a share is in an upward trend, and buying more. And this does make a lot of people nervous. And you quite often hear out there people going, oh, it can't go any higher, but it can. And that's what we want to do, and that's where big winners in that are made, by getting onto a trend. And if you look back here with Warehouse, for example, okay, it went through a bit of a sideways pattern through 2020, the middle of 2020. Then all of a sudden we started to see some really, really good upswings, which is really positive. So even if you had jumped on partway through, let's say the 11th, November, 2020, and had ridden it all the way up, and you might have had a stop around here somewhere. So even if you got stopped out here, sort of 6 months later, that's a good gain. So we were talking around here of about I don't know, $2.30 odd, and then if you got stopped out here, you would have made $3 something, so close $3.40. So you would have made close on $1 a share, which to me is a really good return. But we're going to leave it there. To me, it's not an exciting share. It's not a share I would want to be buying. Just remember though that this is general advice. This is just based on how I view a market. It's not tailored to anyone specifically. But hey, do reach out if you want me to do a share and pull it up and just analyze it as I would look at. Please let me know, and I'm happy to do that. Always looking for suggestions. So anyway, enjoy the rest of your week. Take care.